Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. Grains back to the plus side here today with livestock futures somewhat mixed. Live cattle under a little pressure. Feeders are steady to a little bit better while the hogs are setting back. And Scott, let's talk about the grains. Obviously lower yesterday. It was end of the month. And so we probably got some liquidation, but today back higher. So is that just some new month, new money kind of influence?
Part of that, yes, and thanks for having me. End of the month in August can be a little bit rough. You have a lot of delayed price grains that have to be priced by the last day, and if you didn't find a price along the month somewhere that you liked and didn't price it, then it's going to get priced on that last day. So you do have some of that. I note that in the end of August every year, and feels like that could have been the case again, but we can turn into September here. This is the time of year you can put in a little bit of a low and maybe try to get that harvest pressure out of the way. We're done talking about weather, and we can move on to the next story. Wishing the next story had a little bit more fire behind it, but to get some of these funds to want to buy. But to me, this time of year, I think we're going to be looking at a little bit of buying some of this September dip, or for some of this corn for some feed needs. I think you're going to find some of that money coming into the market there.
Yeah. And this market is, oversold. We should point that out as well on the grains.
It's oversold, and I think we're really going to start listening for yields and deciding what that is. I think our early look in at the corn yields is the silage choppers are humming, is we've got some pretty good corn out there. We know that crop's in pretty good shape. I think we can kind of put that to bed and say, yep, we've got a nice big corn crop, and we had a lot of acres, so that's going to be overhanging on the corn market. So when I say I want to buy some feed needs, I don't think it's because I see this big long rally coming. So it's going to be capped because we got plenty of bushels out there to be had. The soybeans, that's where the question is. I mean, what did this heat do? I mean, August weather is so important to the soybeans, and it was a friendly weather pattern for the soybeans in the August market. I mean, it was hot. What did that really do to the yield? What is in those pods? There's still a lot of question there, but beans are turning fast. We're going to be in them in a couple of weeks, and a big chunk of the corn belt combining those, so you can see the leaves turning. So we're going to get some answers to those questions here pretty soon. So I think the soybeans can find a little bit of a spot to hold here. As you said, it's a little bit oversold, so we can digest what actually some of these yields are in the soybeans.
Absolutely. Do you think, Scott, that we've put in an early harvest low, though?
I think we can try to hold here for a while. I think you're close enough to the lows now, where I'm going to try to feel like, yes, we did. And you can risk those lows. They're not too far away. But I think, yes, we've had a lot of this news kind of talked in. So I'll say yes. And we're into September. It's the time of the month where we can, or time of the year when we can start to hold. And I'm going to say, yes, we have for now.
So live cattle futures under a little pressure here this morning. We came back nicely yesterday when we got that steady cash trade in the south, but it was a little lower in the north. Talk about what cattle are trading today, and where do you think we go here in a new month?
Yeah, quite a surprise yesterday. We had a lot of cash news yesterday. The South, we'll start with them. They did okay. I mean, we had the 179 trade, and then there was rumors of the 178, but quickly back to 179. So they were able to hold it together down there. It was the northern cash that is trading a little bit on the weaker side. You have usually more numbers available in the north, so this time of year that can happen, but producers buckled pretty quick. They were easy sellers. We saw the 183 and 184 trade sprinkle around. And once that started trading, everybody jumped on the wagon and started taking it. Now, we did have packer participation was there. A lot of different packers with those prices. That's a good sign. It wasn't just your one regional that was out there leading the charge. Everybody was in, and everybody's cleaning up. Now, part of me says, okay, we've got more heat coming. And you've got $400, $500 a head profit in these fats. That's why we're a little bit easier to sell. You've got high interest rates. You've got high costs. You're going to hit a big one if you just sell them here. I know it's not the 188 we had, but there's still a lot of meat on the bone here. So that makes us a little bit more willing to sell. But the funds, the way they defend this market, you see that lower cash stuff starts to tip over. In the levels that we're at, near these record high levels, every time we break there is some nervous traders out there saying, okay, I have to have some protection on because we are so high. Funds defend, come on back, and we finish the month higher yet again.
Yeah, definitely impressive, Scott. Let's talk about numbers here, especially, slaughters picked up a little bit this week here. Packers had been suppressing that to try to bump up the boxes. But what has happened in terms of weight gains with the heat? And are their heifers still being retained, or are they still being put in the feedlot? I'm sorry, instead of being retained.
No, excellent questions there. I would say regarding the weights question, the heat was damaging to the cost of gain, to the gains. Guys are selling cattle a lot lighter than what they expected. There's some large numbers when they load cattle out, whether it's 50 pounds or more, saying that it pulled off the weight of what they expected on these cattle. So that was a lot of damage done, and I think that's going to show up in the weights here in the short term. These fat cattle are just not doing very well when you get that kind of heat upon you. So that is pulling a lot of pounds off the market. That's still a story. We're still not done with the heat completely. We are getting around the corner on it. When we do start having some of these cooler days, they're going to put some of that weight back on quick. But as far as cattle that we're loading now, a lot lower than expected on weights. And regarding that heifer slaughter mix, what are we looking at? I'm still seeing a pretty good amount of heifers being slaughtered as a percentage of steers. Now, that's a little bit of last year's story. We knew the heifers were not being retained. They were being sold. The cows were being slaughtered. So we're seeing that happen now, as I think that we're still seeing that the heifer steer slaughter ratio is still a big number, in my opinion, that the heifers are still coming to town. It's this next year that we have to look at. And we do have lower feed costs. We had some moisture around. Some of these grass areas are in better condition. So it will be a big question whether the producer is going to say, hey, I want to start retaining some heifers to rebuild this cow herd, or do I look at this high price feeder calf with 9% interest and say, hey, I'm just going to take some of this money now and stay in a healthy position and stay sideways. And the age of the rancher also falls in there too. We've got to find that guy that's has the ability to put that kind of an investment out there to rebuild a cow herd. If we have a market that says, hey, we're topped out, we're heading lower, you're not going to find a lot of guys lining up to say, I'm going to buy some heifers. I want to be out there in the cold, calving out a bunch of cows with all the labor that there is and all the higher costs that there is in raising livestock. So a lot of questions to be had. I think we'll see some heifer retention. It doesn't look like it's going to be just a large boom. We're going to grow this herd real fast.
And let's end on the hogs here, which really have been chopping around in a pretty sideways pattern. Pretty hard to figure out what the direction is there, isn't it?
Yeah, we can definitely end on the hogs. it's a tough cookie to talk about here. It's had some wild swings, triple digit lower, triple digit higher, and I think the algorithms are having a great time in the hog market right now. We can't decide if October hogs are too high. Is the index going to stay? I did see the index drop from 100 down to 90 fairly fast. That was a quick break. I thought October hogs could get in the middle 80s, and that'd be a fair price as we're looking at December and February and saying that's where there's some more risk, some larger supply. So looking for some hedge protection in the Dece February contracts. I don't really want to touch October here. It's sitting here at 82. I think it can make it to 85, but it quickly gets down to 78, 79 and has you scratching your head. So the volatility is there right now, but I'm going to look fourth quarter, first quarter, get a little protection on for the downside in those markets.
Okay. I'm glad I'm not the only one that can't figure out what the hogs are doing. So thanks for joining us, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.